At conference, he caught up with George Joseph, fund manager at ICICI Prudential Asset Management. So let's hear out his thoughts.
There's a lot of liquidity which is driving the markets, and our economic fundamentals, if you look at macroeconomic fundamentals, are pretty intact for India. Within the emerging markets, if you look at India stands out in terms of low interest rates at this point in time. We are at the bottom of the economic cycle, and we have a very good macro demographics,
Sure.
right? And all is very supportive from a 3 to 5 year time frame. We are very, very constructive on equity markets.
Okay. From a near-term point of view, though, are you worried about valuations? Because the all hope of earnings will revive. That's still not played out. As what the street was expecting. And in that scenario, you think valuations are looking stressed, and there could be a decent correction at least in the near term.
If you look at from the domestic standpoint, I don't see any reason why market should correct, because the structural factor in terms of physical assets to financial assets, the money is moving very clearly. Even mutual fund inflows are at a record high every month, and we see that all other asset classes are also not participating. If you look at gold, even bonds, bigger amount of rally already has happened. And also you look at real estate. These are the sectors, assets from where the money is moving to equities. We think that is structural and it will continue for many years.
Okay.
Second part is, if you look at from the near-term perspective, for that, the valuations look stretched from a PE standpoint. But what we have learned is that over a long period of time, if you look at markets on the cyclical bottoms, you have to look at more to do with a price to book.
Sure.
On a price to book basis, markets are reasonably valued, and it's like 2003 levels.
Correct.
And that's where we are much more constructive on equity markets on a 3 to 5 year basis.
Okay.
Near term, global uncertainties can change the valuation, change the prices.
Correct.
But that is not something which we are concerned about.
George, I was looking at one of the largest fund that you manage, which is the ICICI Prudential Long Equity Fund. And interestingly, the top 3 or 5 stocks largely comes from IT and pharma. I know you can't talk about individual stocks, but largely that's where there is too much of negative sentiment towards both these sectors right now. Is this a value buy, or do you think there are structurally things are changing for them to do well over the next few years?
So, generally what we do is that as a part of, when I look at funds, when I look at markets, there are 3 parts. You have a defensive basket, you have a domestic cyclical basket, and a global cyclical basket. So I am very much in favor of the domestic cyclical basket from a 3 to 5 year standpoint. But from near-term point of view, when you look at the valuation of pharma and IT, it looks pretty attractive. Especially IT sector is looking very interesting point. If the growth comes back in the sector, as the BFSI segment is start doing well in US, you will see the growth coming back to the sector. And many other sectors are also out of the woods compared to the last 3 years. Like energy is out of the woods, and manufacturing is started doing well. So slowly, I think, and large economy is doing well, which is North America, where all the IT companies are focused on. So we think that IT sector is a good value buy from a 3 to 5 years time frame, and also so you need to have the complexion of some export basket in your portfolio. You need to have domestic cyclical in your portfolio, and also some global cyclicals in your portfolio.
Looking at a large cap fund, and interestingly, there are no oil and gas stocks in that portfolio, at least in the top 10, whether it's HP, BP, IOC, or for that matter, Reliance, which has rallied pretty hard in the last few months. What's the broad view on that space? I know you can't talk on stocks, but broadly on the oil and gas space, you think there's still money to be made, or you'll be averse of that sector?
There are few stocks what we have in that sector, in the portfolio. It might not be in the top 10, but on the
You have exposure.
we have exposure to it. Some of the oil marketing companies, which we think there are more leg room for these companies to grow on a next 3 to 5 years time frame. And we like some of the gas utility companies as well. Because structurally we think these two will do extremely well compared to a pure downstream companies or upstream companies.
Given that there's going to be consolidation and pricing power is likely to be back for some of these
Yeah.
players, is this a good time to bet on the telecoms, or you think there is still pain as far as the pricing is concerned for telecom players?
No, we think that as a house we believe that telecom is a space you have to be in for the next many years, because if you see global counterparts, their market caps are so huge, and India being a growing country and where the data is now just started to catch up, we think there is a long way to go for the telecom companies. For structurally, we are bullish on telecom companies.